Hello, everybody. I have some exciting news to share with you guys. For the very first time in over 24 years, we may have a change in the PDT rule. Some of you may ask, "Oh, RV, where have you been with those trading recaps in the morning?" So I've been going through some personal stuff, but I'll be back with those recaps very soon. I promise you guys, I'll be back very soon. I've been trading um, on the side every single day, but I'll be back with those recap. But today I wanted to share with you a change that may be happening very soon. So we may have a change in the PDT rule. So let's take a step back to understand exactly the history of this PDT rule. So back in the day in the late 90s, we had what was called the dot-com bubble. So internet was a thing. People was now getting used to internet, and now at that time, more people were interested into trading the market. Remember, before the internet, you had to be a stockbroker in Wall Street to be able to trade. But now with the internet, everybody was now having access to to the market and being able to day trade. So what happened was a lot of people blew their account very quickly because with day trading comes a lot of risk. So when you have access to the market, there is this risk of over trading, losing money, because losing money, there is something you cannot avoid. It's there. It's there. It's a real thing in the market. No matter how experienced you are going to be losing money. So back then, people lost lots of money, right? They blew their accounts, and that was also a risk for the brokers because they have to give you market data. If you are trading over margin, the broker, they are going to have to take a loss. So the regulators looked at the situation and they were like, wait a minute, let's come up with two scenarios. Number one, we need to protect investors and retail traders from blowing up their account and losing lots of money. But number two, we have to also protect the market makers, the brokers, the clearance firms for from losing money as well. So in February 27, 2001, they came up with what we know now as the day the PDT rule. So it stands for pattern day trader rule. So basically, the rule states to be able to trade the US market on a margin account, you have to maintain a minimum of $25,000 in your trading account. Whoa, $25,000. So not every single person has 25,000 to actually trade every single day, right? On the margin account. And that was a problem. That became a problem. But brokers also came up with a kind of not so good solution, but they said, okay, now that applies only with margins account, but you can still trade with a cash account, meaning you can have $1,000, $2,000, three, five, $10,000. You are still going able to trade, but you wouldn't be able to day trade every single day because the margin account basically gives you an ability to trade for an unlimited number of times every single day. You can take millions of trades every single day with a margin account. That's not a problem. But with the cash account, now there is a problem. What's the problem? Back then, we didn't have like technology like we have now. The market wasn't really accessible as we do have now. So with cash account, we had what was called the T3 settlement. So meaning, let's say you have a $5,000 account, right, in the cash account, and you take a few trades, and then you trade up to $5,000. So now, back then with the T3 settlement, you had to wait 3 days before you could be able to trade again. Meaning, so if you took $5,000 worth of trades on Monday, you couldn't trade on Tuesday, you couldn't trade on Wednesday, you could only trade on Thursday. That's a problem, right? So you wouldn't be able to actually day trade. Now it's kind of different because many brokers actually offers you the T1 settlement with cash account, meaning if I have a $5,000 cash account, I can take $5,000 worth of trades today, and then my trades will be settled the next day, and I should be able to take to trade again with those $5,000. But with the margin account, I can trade $25,000 worth of stocks in the morning and trade again in the afternoon. I can take like millions of trades a day. That's not the problem. But to trade the US market in the US with a US broker, you had to maintain a $25,000 minimum. So that threw a lot of people off because not everybody was able to have 25,000. When I got started trading, I didn't have 25,000 to put into my trading account. So we started to look for solutions, and the best one was we had to use offshore accounts because remember, with the margin account also you have leverage. That's what we do like, because if I have $25,000, let's say in an E-Trade account, for example, E-Trade will give me 4 times leverage. So meaning I would be able to take like $100,000 worth of trade in any given day. 25,000 times 4, that's equal to 100,000. That's lots of buying power that you can utilize to take advantage of momentum on the market. But now with the PDT rule, that was impossible if you don't have $25,000. So we switched. I mean, most of us started with offshore accounts, which basically still gives you margin, but they are not forced to enforce the PDT rule. So meaning you can have a minimum of $500 into that account, and they are going to give you, most of them give you 6 times leverage, like CMEG that I use. They give me 6 times leverage. So basically, if I have $5,000 into that account, I can have $30,000 in buying power. But that is maybe about to change because there is now a proposed rule. So this proposed rule basically is intended to basically change the restrictions when it comes to day trading. So to be a day trader with a margin account and trading the US market, regulators are now finalizing a plan to replace that controversial rule that was created 24 years ago. So now the new proposed rule basically is suggesting that in the US we could be able to have margins accounts and day trade with as little as $2,000. Boom! That's a good thing, but that is also a bad thing. Let me explain. So it's a good thing because number one, we are going to be able to now utilize U.S. brokers and have as little as $2,000 in our trading account and trade the U.S. market. But it could also be a risk, not only for retail traders, but also for brokers, because now with $2,000 you can have, if you have leverage, you can have 4 times leverage. That's $8,000. And we know for a fact when people get started, I was a victim of that too. We tend to overtrade, especially if your first couple trades in the morning are red. We try to recoup that money right away. We try to revenge trading, and then the next thing you know, you are just going to spiral and have big losses. So where I see this as a big risk for brokers is, let's say someone short a stock on Friday and they have, let's say, $8,000 in buying power, but in their account they only have $2,000, right? So let's just call it like $8 stock, and they buy 1,000 shares on Friday. That's $8,000 position on Friday afternoon, and they can either buy a long or maybe shorted. God knows what. Let's say they shorted on Friday. On the weekend, the market doesn't. The market is closed, and come Monday morning, those brokers, they're smart. They have algos that's gonna auto liquidate you if you are in the negative. But I've used margin in the past, and I had instances where my account was supposed to be liquidated when I was deep in the red, but it wasn't. And when I closed my position, my account balance was negative $400. So I had about $1,200 into the account, and I took a $1,600 loss. So I was actually negative. And I asked myself a question: okay, if they have the algos to auto liquidate you when you are deep in the red, but it didn't liquidate me, not only one time, multiple times. Sometimes I even had a stop loss and didn't trigger. So now we may go back to the situations where people are going to have margin calls a lot, and that's going to be loss of money for brokers, and it's going to be loss of money for retail traders, and we may see a lot of new beginners blowing up their account over and over and over and over and over and over again. So my advice to everybody is, it's great that we are having this change. If that's happening, it's going to be very beneficial for most of us. But for beginners, I would suggest you to keep on doing what you've been doing, which means educate yourself enough, right? Build a track record of success. Trade in the sim if you have to, for as long as you need, for you to prove yourself that, okay, now I have a strategy, now I can master this strategy to be profitable. And once you can prove that you can be profitable in the sim, now you can transition into a real account using margin if we get a $2,000 minimum account. And with your experience, with your knowledge, and with your track record, you are going to be able to manage that very, very easily and properly. And because you are going to be equipped with the knowledge, and you are going to have the skills that's required, and also you are going to build an emotional mindset that's going to allow you to navigate this market properly. So this is a very good thing, this new proposed rule, but it could be a knife that can catch you on both sides. So be smart, be wise. I'm so happy to see this because I've been wanting this change for the longest time, but I'm also skeptical when it comes to seeing what may happen to beginners traders. Just be smart enough and use it wisely. Let's not fall into the trap of over trading or revenge trading or being irresponsible with our accounts. It's a new thing. Let's enjoy. We all love this game. It's the best job in the world. But let's be smart enough, practice, learn, build your strategy, and surround yourself with like-minded people that love the stock market and that love trading for you to grow. So I'll be back soon here with my morning recaps. Very, very soon I'll be back with my morning recap, and I may start a small challenge. Potentially I'll be starting a $5,000 account challenge, and I'm gonna see how fast I can turn that into 100,000. So it could be 2 months, could be 5 months, could be 6 months, but I want all of you guys to come along with me in this journey. So stay safe, guys, and I wanted to share this information with you. I think you may have seen it all over the news, but I wanted to share with you guys. And if you watched until the end and you like my content and you like day trading and you like the stock markets, please give me a favor, like the video, share the video, and why not subscribe to support me, and let me know in the comment section below if there is any specific topic that you may want me to discuss or cover. And I'll see you when I come back. Take care, guys.